Well. Good morning. This is Mr. Not Advice. It is Saturday, May 30th, 2026. It's my weekend update, as always. It's for education and entertainment purposes only. Okay, so we have a continuation of the back and forth between Iran and the US, where it appears as though the market, is a look forward mechanism. So the market is adjusting to the potential and probability that some sort of deal will get done, even though we've had intermittent shooting from both sides, and it appears that the uranium issue still continues to be a sticking point between the U.S. and Iran. However, progress is being made, and every day that we don't have a breakout of war, the market's going to get more comfortable to trade as if looking beyond that. So I think risk remains high in the market. um, we don't know at any time shooting could break out, obviously, at a higher level than this back and forth that we've seen over the past week. The market remains very fragile as the broadness of the up move in terms of asset mix is very narrow as we're watching the continued move in microchips and memory stocks, and that's continuing to pull the NASDAQ higher. You know, I've seen these types of markets before where almost everyone's saying it can't go higher, it can't go higher, and yet it continues to go higher. And that's why we started trading about 3 weeks ago, um, is because during times like this, the market always climbs a wall of worry. And I would say we have that. Traditionally, you see markets top when everyone is bullish, and we don't have that right now. I think there are two very distinct camps: those that are holding their nose and buying, as well as those that think that the market doesn't deserve to be this high and is going to crash. So I think all of them could be true in terms of potential. But as I've said over and over again, I follow price, and price is simply telling us that the market is going to continue to go higher unless we get a big expansion of kinetic action in the Middle East, right? We had some, in fact, this week we had some good news because we had 10-year rates, as the chart's showing you right here, dropped. So this fear that the rates were going to blow out, obviously, if rates are going up, then bonds get purchased and stocks get sold. Here's a 30-year, right? This is the third time in recent uh, history that the 30 years popped above that 5 level, and here we are going back down. Now, the argument can be made this is a wedge and this is going to drive it higher. That very well could happen. And if that does, then I suspect that the market's going to struggle a little bit. Okay. One of the things that is remaining pretty consistent is the 10-year and Brent oil are tracking each other, which makes sense because if oil goes up, then that's going to increase inflation. If inflation goes up, that means yields will go up, and that's why they are tracking like this. So it's something just to keep an eye on, that even though they're separate asset classes, you can take a read from one and it translates into the same message in the other asset class. And it has been heavily shorted. All right. In fact, if you look over the last 10 days, the software as a service has outperformed semiconductors, right? We are in IGV, and I was making the comment to one of our members, Mr. Chrome, that I think this could set up very well for a squeeze. Why? Well, everyone's got too negative on software as a service, and I think it could be a catch-up trade. Where will the money come from? Well, could come out of chips, which it did apparently over the last 10 days. That's what we're seeing. So we're not seeing that same uh, run up in chip stocks. We're seeing a gradual increase in chip stocks as well as memory stocks. And as a comment there, while I remain long via DRAM ETF, I do know that at some point, and I have my eyes watching for this, we're going to see, I think the potential is very high for a wickedly fast reversal in memory and chip stocks. How that will manifest itself or what will be the trigger for that, I don't know. We saw last week where overnight a Chinese company had come out and said that they're producing DRAM and RAM at a discount, much cheaper chips in China. And it's going to be something like that, something ridiculous where all of a sudden the market seems to get the idea that, maybe the easy money's been made in memory and chip stocks. There's an argument there because on one hand, you've got Micron trading in single digits PE on a forward basis. But also on the other hand, we are starting to see reports of companies scaling back their AI token use. It's believed that Amazon spent $500 million before shutting down access to AI tools. And I think we're going to see more of that. And if that happens, then what's going to happen to the revenues for the AI companies? It's going to go down. So I actually think that that's canary in the coal mine, so to speak. It's an early warning signal that the use of AI at the corporate level, while it was pretty much open season and employees could use it for whatever they wanted to at any time, companies are going to cut back because it costs so much money. So I don't know when there'll be a pullback, but I do suspect we're going to get a pullback in AI and chips. Now, whether that rolls over to the rest of the market remains to be seen, but I continue to size small. We had a very good week this week, but size smaller than normal, which means instead of me taking a 4% position, I'm taking a 2% position. Okay. Because as I've told the members, I continue to think investing in this market is like playing with fire. It's inevitable that I'm going to get caught, right? Let's say different way. The chances remain very high that I'm going to be in the market with positions and we get a healthy pullback. And that's really what I'm waiting for before I expand my position size up to normal. So let's look at another chart here. So I was talking about short squeeze. Right now, software is at the 100th percentile in terms of the short squeeze risk. So it is, as I said, we are set up for a short squeeze in software as a service stocks, and we have that exposure through IGF. And then finally, if you want to see what's being sold, well, we have consumer discretionary or staples right here just getting absolutely hammered. And buyers were in real estate, infotech, as well as consumer discretionary. I think this has to do with a lot of bottom feeding going on. Consumer discretionary has been one of those areas that have just gotten pummeled. And that's why I think we had buying in that. Sellers this week were energy, materials, and staples, as well as industrials. So looking at the overall market, the SPY right now remains to be seen if we are going to be able to break out of, one second here, if we're going to hold this breakout right here to the top side above 750. I think we've got to hold 750 and then 745 as pivots. If we're able to do that, I think the market continues to march higher. Taking a look at the Russell 2000 last week, this is entirely, this is a great breakout. We had the breakout right here, and now it's consolidating for a move higher, I think. Small cap market, while we didn't have the dash for trash last week, it remains, all the index remain in a bullish uptrend. Here's where our QQQs, our tech index, same thing. We had the break right here, and then it's been consolidating and moving slightly higher. In terms of individual stocks that I own, I am in NASA, and I added on this big downdraft on Friday. I added to NASA, and I think that we get a pop over to a new high sometime next week. We are in my tech, and once again, what do we see? A breakout, consolidation moving sideways. Okay. IGV had a big move on Friday, 102, but you can see that, and we already scaled on it. We recaptured the 200-day moving average, and the next stop for IGV is all the way up here at 107. So squeeze potential is absolutely there. How high? Up to 117. So we are now back in the upper 50% range of this big retracement that occurred. But the ability to move past this 200-day moving average on Friday with such a strong move is pretty surprising to me. Again, we still own DRAM. We've scaled multiple times on it. We rolled, and now it is slowly again marching higher. Cliffs Natural Resources, we caught this breakout. Okay, we caught the breakout here, went in here, and we've already scaled on this too. Looking at EOSC, I think EOSC right here, you can see this orange channel is +1 standard deviation to -1. Over the last 45 days, it has pretty much respected that, except for this pop here. So if I were a betting man, I would say that we're going to either come back down to about 730 and bounce again, or we're going to meander around this white line, which is the mean, the median of price action over the last 45 days. I will make this comment though. What I don't like is every single swing high. So this is a swing high, okay, and here and here and here. So each time this has tried to swing higher, the momentum, the MACD histogram has gotten weaker. So that's not something I like to see. That shows me that the momentum, the buy momentum is not reflected. Well, the stock price is saying one thing while the buy momentum as measured by the MACD histogram is not supporting it. So, therefore, what do you do in this case? Well, I don't see right now that there is the appetite for this thing to break really much higher over 10 into that 200-day moving average. I think it's going to take more news, which we've been getting news. So, looking at, let's take a look here. Uh, Looking at oil. So oil here is really back down in the minus S2 to SD, which is the second standard deviation. We could get a bounce here around 83 to 80, right? But again, what I'm seeing here is it's pretty much range bound. What I don't know what's going to happen is if they are able to get a deal solidified and signed in the Middle East, is that going to then force the market then to start reflecting on just purely corporate earnings and growth, or are they going to become more sensitive to interest rates and or the Fed? We had Besant and the new Fed chair both come out and say that they don't believe that the Fed should be providing forward guidance, and that would be a big change. I'm sort of neutral on that, but that would be a big change in terms of what the market has in terms of tea leaves for how they do their projections for the next couple quarters. So I don't know how the market would react to that, but I'm looking at the overall economy, and there are certainly cracks forming underneath the surface. We have rise in delinquencies in credit cards, student loans, car loans. While consumers continue to spend, they also are not as hopeful about their economic future relative to the past 12 to 24 months. So consumers are spending, but we also are seeing, as I said, increases in delinquencies to pay their debt. I think that the market is waiting on not necessarily peace in the Middle East, but less tweeting from the Great Orange One. And that will happen if they get peace in the Middle East. And I do see parts of the market starting to trade off their own credentials, their own fundamentals. And I think it's a balance right now. At any time, I think that the rug could be pulled out from underneath the market if we get an increase in fighting in the Middle East. But at this moment, I think that the market wants to go higher. Okay. It's looking for a reason to go higher. It continues to shake off any negative news. 4 weeks ago, if you had had shooting from either side in the Middle East, it would have caused the market to really dive. We didn't have that. We had quite a bit of shooting going on in the past 3-4 days in the Middle East. And so I think the market wants to go higher. And as long as the news is not too bad, okay, either geopolitical or economic, it's going to continue to go higher. Why is that happening? I still think it has to do primarily with the amount of money printing that's going on. When you have countries printing a tremendous amount of money, quantitative easing, right? When you have that going on, those dollars, that currency, that money's got to find a place to go, and it goes into the stock market. So I think that as long as we continue to have an easing environment from monetary policy globally, I think that the market will continue to shoot higher. Um, Maybe not as fast at the same speed as we had, a month or so ago. But I think there's going to be a lot of people that are going to be sorry they sat on the sidelines through this upturn that have been waiting for the quote unquote inevitable pullback. And it is. I mean, it can. This is a very tentative market right now. And especially as I said, if you look underneath the surface at some of the technical ingredients that are happening in the market, but the fact of the matter remains, price is the best representation of all available information out there: news, rumors, truth, lies, opinions, and price is going up. The market is forward looking, so they're already looking beyond this war, um, and I think that even if we get a pullback, and if we do get a pullback, I think it's going to be very fast and deep. I think we could get a 10 to 15% pullback. That could happen in a couple days. I suspect that I believe I will, there is a good chance that I'll wake up one morning and see the NASDAQ market limit down, or I'm sorry, not limit down, but down 1,000 points at the open pre market. That'll tell me that we're having the shakeout that we need. We do. We do. We need a shakeout here for the market to really continue higher with strength and duration. We need to have some of the animal spirits that are in the market, especially in memory and in microchips, bleed off. And until we see that, I, I, any move upwards, I think, has to be viewed as that there is the potential that it can be reversed very, very quickly. Um, we had just some individual stock news this week. I'm also in PCT. Also, we had some news out of INV this week. I actually thought that news, the short report on INV, was fairly substantial. I thought that was a big deal. Now, the market itself, as long as that customer for INV, um, Dark NX or whatever they call it, Dark X, as long as that doesn't make up a huge part of the revenues for INV, I think the INV will be fine, and any downdraft should be viewed as a buying opportunity. Now, if it appears to be that it accounts for a significant part of the revenues for INV, then the stock will go lower. So we've got going back to NASA, we had Blue Origin blew up, but Bezos has not had a good run with Blue Origin. We had that blow up, and that's why NASA opened up on Friday down here at about $38. We closed at 40.17, almost unchanged for the day. But June 12th is the target for SpaceX IPO. If they're able to hit that date, I think we're going to see a lot of these space names continue to strengthen into that. My goal is to be out of NASA before the deal comes, because I think there could be, that might be the top. I mean, it's interesting. In the past, a lot of times you'll have these record offerings, of record breaking off stock offerings, and those are the tops. And so this SpaceX could be the top of the market. I'm not as concerned about, I think the number is like 200 billion or so coming out of the market to fund SpaceX, OpenAI, and there's one other one that I'm missing. I'm not really concerned that that's going to create a demand issue for stocks. The thinking is, well, people will be selling their stocks in order to get into SpaceX and OpenAI. I don't know about that. What I do know is that the OpenAI and SpaceX are two different creatures when it comes to IPOs. I've put in for SpaceX. Schwab is allowing it as long as you have over $100,000 in your account. You can, you can put in for the shares. SpaceX is literally the one stock that I would own, and I don't own stocks. OpenAI is not one of the stocks that I would own. Okay. I think there will be a day of reckoning with artificial intelligence where, quite frankly, it becomes commoditized, where so many providers are offering uh, AI that the price for use will come down. We're already starting to see that with some of the pricing in AI. And what we're talking about are the tokens, the cost to look up uh, X amount of data. So we're starting to see that roll over, and that won't be good for OpenAI. Do I think that SpaceX could launch the market higher? I don't think so, because it's, again, we're pretty far out in terms of business development for SpaceX, what the real potential is. When I say real potential, I'm looking at, his goal is, I think, to be putting up 2 to 3 launches per day of delivering payloads, to space. But also, there's mining, there's travel and recreation, then of course military contracts. I look at SpaceX business model as being much better than OpenAI's business model, quite frankly. So, but there is the chance that SpaceX IPO could call an interim top, that when that thing starts trading, um, it is going to be the height of the market maybe until, this fall. I don't know. We'll have to wait and see. The potential is certainly there. I know that cash levels remain low. I know that everyone's on one side of the boat and nobody is buying any put protection. This is, yes, these are the things that bears a point to and say this is why the market has to go down. Well, just because there's an imbalance doesn't mean the market will correct that imbalance within the time frame that somebody thinks. I always use this rule of thumb: whatever time frame I have for a trade, I just double it. So if I think something can happen in 2 months, it'll probably happen in 4 months. That served me well over my 30 years as a professional, by the way. So if I were to guess, I would look at this and say, well, I think that we are going to get an interim top. I think that it's going to come out of, oh, some report that has to do with memory, or some technological advance that has to do with memory, and or other companies will come out and say we're severely restricting our AI token spend, and that will trigger it. Okay. There is just way too much on the long side. And if I were looking at the market that's going to dive the hardest, it'll be Korea. EWY is the ETF for South Korea. That's a bomb waiting to explode. They have people actually mortgaging their houses in order to go into the stock market to be able to buy their two stocks, SK Hynix as well as Samsung. That never ends well, but it doesn't mean that it will collapse the entire market. So risk remains high as we get into the summer months here. The whole theory of sell in May and go away, I don't think is going to play true this summer. We've got too many things coming out. SpaceX IPO, OpenAI, the war in Iran. We've got Kevin Warsh, the new Fed chair. There's just too much going on that I think that we're going to be in for a quiet summer. Typically, what you see is Memorial Day is when professionals start taking their vacations, take a couple weeks off, and that's why you see a drop in volume. I don't think it's going to happen this year, but as long as the market continues to elevate, I will continue to be long the market, because my attitude is this. So if I look at the performance, let me pull this up here. So over the past week, up 1.67%, but over the past month, I'm up almost 9%. Okay. That's across 25 closed trades. So the way I look at my position sizing is I'm up, let's say 9%, right? And if I have 20% allocated in the market, I always assume I'm going to get a 50% loss. So if I take a 50% loss on 20% of my assets, that's 10%. Can I deal with a 10% loss? Yeah, I can deal with that. It's not something that I can't make up very easily. I'm up 30, almost 32% for the year to date, and over almost 108% in the trailing 12 months. So if you are trading long to the long side, you have to assume or you have to expect and be okay with that whatever money's in the market, you're going to take a 50% loss on. That's the only way to trade this type of market that's on very thin ice, so to speak. Um, it- on the other hand, I will say this: I've traded in markets like this before, where everyone's always calling for a crash, and it doesn't happen. So the fact that we have so many people on the bear side is telling me we still have not reached that market top yet. Okay. Usually, what you see is the market tops when everyone is bullish, and we don't have that yet. But just taking a look, I'm okay with continuing to be long the market. My greatest risk was in the first couple of weeks that I started trading again. And hats off to my members who literally didn't trade for 4.5 months. That's incredible self control, by the way. But if I lose, if I've got 20% and I lose 10%, well, that makes my year to date, instead of being up 31, I'm only up 21%. I still believe I've got plenty of time to hit what my target is, which is between 50 and 70% annually. You have to be okay that you could take a quick loss on it. Doesn't mean it's going to happen, but you really do have to accept that. Um, I hope a pullback happens. I want a pullback so I can buy some of these companies at a cheaper level, but we'll have to it remains to be seen if we do get that pullback. So, all right. So for those of you playing at home along, I think Micron hits $1,000 this week, no problem. I think that'll continue to push DRAM up. EOSC looks like has confirmed a reversal on the daily chart right here. Okay. Um, I don't have any. Well, I don't know. I'm going to look at maybe shorting this back down here to the 730 level. I often carry shorts and longs to the boat at the same time in the same stock. Um, Bitcoin and Ethereum. Uh, you know, I think that somebody asked me, when would you get bullish Bitcoin or Ethereum? Well, I wouldn't do it until the South Koreans decide they're done gunning their market up, because that's what pushed Bitcoin up previously was the South Korean investors. So until their money stops going into chips and memory, I don't think Bitcoin's going to find a tradable bottom. And we could get as low on this move all the way down to about 6,500, 65,000 on Bitcoin. I believe that Ethereum also is probably going to take out this low here at 1744, unfortunately, and we're going to trade somewhere in the 1,000 to 1,300 range by this fall. So, all right. I hope you all have an excellent weekend. I know I will. And I plan on seeing all of you in the boardroom next week. Oh, don't forget that if you're listening, if you have any stocks that you want me to take a look at, DM me. Put it into Twitter, put it into Discord. I'm happy to take a look at it and give you my opinion on it. But other than that, I hope you all have a fantastic weekend and official start to summer.